On this video, Saturday, 18th of May 2013, hope you had a good week's trading. Well, although the site's called Emini-Watch.com and I trade E-minis exclusively, I must admit I am transfixed as to what's happening in the forex markets, and particularly the dollar index at the moment. So I want to run through that and some of the long-term charts I'm looking at the moment, just because I think it's really important. Over the last several months, I've changed my kind of setup with my charts. I used to have kind of risk-on and risk-off charts, but for me, a better way of looking at the markets is looking at the investable markets, the assets themselves, and then to look at the currencies and the countries that you can invest in, and look at the world in terms of those kind of two pictures. This is kind of the picture I look at in terms of investable assets in the markets. A little bit bunched up here in the video, but on a full screen these kind of look perfectly good. And I've got the E-minis and the bonds here on the left hand side. They're kind of a pair because the money tends to flow between equities and bonds. Then we've got the major kind of commodity markets. We've got crude and copper, and then the precious metals, gold and silver over here. And then on the other side of the ledger we've got the currencies. So if we look at the currency setups that I look at, I'm looking at the dollar index and the Japanese yen, again because they're the carry trade currencies. They're typically the currencies that have had the lowest interest rates, and so people borrow funds in those currencies and then invest in higher beta, higher kind of opportunity markets. We've got the European markets with the euro and the British pound, and then the commodity markets with the Aussie dollar and the Canadian dollar. So that way of looking at the world in terms of investable assets and countries gives me a bigger picture in terms of where the money is flying. Now, as a little kind of helpful hint using TradeStation. TradeStation has these two little useful kind of pull down menus on each of these charts. You can link charts by symbol, or you can link charts by interval. And what I've done here is I've linked each of these 6 forex charts by interval. So at the moment they're showing better trend line on these 6 different charts linked with monthly time frames. And what I can do just by selecting one of those charts with a daily time frame, hit OK, and it ripples through, so all of these charts are now showing daily time frames. So you can roll through your charts kind of in a single window, looking at daily, weekly, monthly data kind of quite simply. So don't forget to use those. They're useful little drop down menus. Now, better trend line shows trend breaks and consolidation periods. Consolidation periods are white bars here, and that's where we get rising and falling trend lines, and the market's waiting to break out into either an uptrend or a downtrend. Uptrends are marked in red, downtrends are marked in green. A convention I adopted kind of years ago and have never changed, so it's not kind of to everybody's taste, but that's what I tend to use in better trend line. And better trend line is drawing these lines automatically, so the advantage of that is no kind of second guessing as to where you draw your pivots and where you draw your trend lines. It's quite nice in terms of taking that thinking out of the picture. So dollar index on a daily chart, we've had a large kind of basing period happening towards the end of 2012 into the beginning of this new year. We were in a downtrend, we had a false breakout, come back into consolidation, then we had a proper breakout here, and now we've had this kind of bull flag kind of plot over the last several weeks where we've been in this little consolidation phase with series of kind of white bars, then finally breaking out into an uptrend, continuation of this uptrend. And with this week's activity, Friday's activity breaking up to 84, this is an important kind of breakout on the daily chart. Now, dollar index is kind of a consolidated view of the major currencies, and because we're breaking into an uptrend here, we're breaking into downtrends on most of the other currencies, so I can show you that. The weakest of the lot has been Japanese yen. Maxed out in October, we've been in an incredibly strong downtrend. We've had this consolidation phase just continue to break down and down, and every time we've had a little consolidation phase, we just kind of continued down on this downtrend. So we got downtrend in the yen. Canadian dollar this week just fell out of bed with Friday's activity. You can see here it's been in a downtrend since October, weakness in the commodity kind of markets. It's been weaker than the Aussie dollar. We've been through these kind of ledgers that we've just been breaking down. With Friday's activity, we had another consolidation zone, bang, breaking through this support line down here into a continuation of that downtrend. Aussie dollar, now I've been talking about the Aussie dollar a lot over the last 2 weeks. I apologize if I'm kind of repeating myself, but it's important. Aussie dollar 102 was the critical level. We had the RBA announcement that we fell out of bed through this consolidation zone, through that important level at 102. The other next level down that was critical was parity against 101, 1-to-1 versus the US dollar, and we dropped through that easily. And now we're at 97 cents on the futures market. Big move. So, in the last month, we've had a move down from 105 down to 97. So we have an 8-cent move in the Aussie dollar, which is absolutely huge. British pound. Pound's been weakening again, and we just had, we had some bad news out at the beginning of the year out of the UK economy, and so the pound kind of fell out of bed pretty quickly here. Then we had a little bit of good news coming out of the UK, and we've had this kind of complex correction on the way up. It's a bit of a bear flag. Now we've broken again through another out of consolidation into another downtrend here on the British pound. So that's kind of going down. And then the euro, similar pattern, although the euro was stronger than the pound. And that, I've been attributing this to repatriation of funds by banks in Europe trying to repair their balance sheets. And now we've got central banks, some of the central bank, Japanese central bank, Bank of Japan, we got the Israeli central bank buying European sovereign bonds, corporate bonds, and blue chip equities. So we've got money being printed out of those central banks, kind of flowing into the euro, and that's in order to depress their currencies, but it's also been unnaturally kind of supporting the euro. But over the last several days, we've had the euro kind of fall out of support here, and we're coming back down to this critical level at 128. We've kind of bounced off that a couple of times, but this time I think we're going to slice through it. So there we go. On a daily basis, you can see that we're breaking into these uptrends. But what I think is more important is, let's just bring this up on a monthly chart and just roll through them quickly. So this is dollar index on a monthly chart. You can see going back to 95 here, through the 2000s and into the latest period here. Currencies tend to move through these kind of big trending periods. Currency can be viewed as a measure of the investment attractiveness of that particular country. So leading up to 2000, we had the tech boom in Silicon Valley, and we had the NASDAQ kind of .com bubble that ended up in a crash. But you can see the dollar index was what was strong during that time period. So we had all the money flowing into the US in order to invest in that .com bubble. The money kept on flowing in, although the crack in the NASDAQ happened in 2000, but people were still thinking it was going to come back up, and so dollar index was still strong at those highs until people realized, no, the game was over, and then the money started flowing out of the US. And during this time period here, for the next kind of 10 years, the money was effectively flowing into risk-on and commodity markets. So we had a boom in the commodity markets. We had kind of two legs to the commodity markets kind of going up, and we had strength in Canadian dollar, Aussie dollar, Brazilian real, and so on, and money moving out of the US dollar. And then for the last 2 or 3 years, we've had this kind of wide-ranging consolidation phase here, and you can see you've got all these white bars on these monthly charts, just the markets, the dollar index kind of consolidating here. But in the last couple of months, we've had a breakout of that, a retest back into the zone with a white close into that apex, and now we've broken back up with a very strong kind of pattern here. Now, because we've spent so much time basing, this means that the energy is built up and we're ready for a trend move. We've had an uptrend, a downtrend, a basing move, and now we're breaking into an uptrend. This could go a lot further than people think, particularly because we got so much negative press around the US dollar. Everybody thinks, that the Fed's printing too much money, gold ought to be, in the multi-thousands. That the US, there's no reason to be investing in the US dollar. We've got this kind of, the general public think the US dollar is a bad currency to be invested in. The fact is, when you look around the world, the money's flowing out of Japan, the money's flowing out of Europe, and the only place left to go is the US. So it's the kind of cleanest dirty shirt, if you like. But these kind of trend moves, because we've been in a consolidation phase, this for me is an important kind of trend move. This could go a lot further than you think. I've been talking about this for nearly a year and a half, 2 years. I've had my trading capital stuck in US dollars for a long time, kind of waiting for this, and then finally think, with this activity over the last several weeks, we're finally getting a breakout into this pattern. So for me, it's really important. Again, the reverse of that on these other charts. Here's the Japanese yen fallen out of bed over the last 6 months. So strong downtrend move here. Canadian dollar, we've been in consolidation here. This was the flow into the commodities markets from 2002 onwards. We had a global financial crisis which kind of whacked the Canadian and the Aussie dollar and so on. We've kind of moved back up into this consolidation phase, and then with this month's activity, we're breaking out of that zone. Then we've got Aussie dollar, same thing. We've not printed a downtrend line yet, so it's not shown as a consolidation period, but that was a rising trend line and we're falling below it, so that's kind of important. And here's the pound. So this was 2-to-1. This was when all the Brits were going to New York and kind of buying up sacks and kind of enjoying themselves, spending around the world. It was a little bit of a mirage, I'm afraid. The pound got whacked, and then we've just been going through this consolidation phase and moving out of it into a downtrend here on these monthly charts. Euro, that consolidation phase is a lot wider. You can see we're still in white bars here, but this kind of level down here, kind of mid-20s, low 20s, is really important. So I'll be looking for that to be broken over the next kind of several months kind of going forward. So big picture, dollar index, the rally in the dollar index is really important, and it's supporting the equities kind of market at the moment. Let me just run through very quickly the weekly charts. I got quite a lot of pushback. I don't normally get pushback when I kind of put out videos in terms of what's kind of going on. I think I appreciate that I don't get emails talking about directionally what the market's going to do. Everybody just seems to listen to the videos, take on the information, and process it as they see fit, and they kind of use it or don't use it kind of going forward. But when it came out with the Aussie dollar video, I got quite a lot of emails kind of pushing back, saying no, the Aussie dollar was going to rally back up. I hope with the last kind of 3 or 4 days activity, you can see that the trend move down has been really strong. It's unlikely that it's just going to bounce back from where it is. So it was interesting that was kind of phenomenon after that video. But this was an important week for the dollar index. We had weekly resistance kind of print, and we got a blue professional bar coming through that resistance and closing on the highs. That's jumping the creek. So we're moving into an uptrend on the weekly chart. So that's kind of important. And then when you look at the weekly charts on the other currencies, you can see the reverse pattern going on. So this is Canadian dollar. We got the support here with Friday's activity. We're really close to that support level. And if we get bearish divergence and we kind of continue down with the selling, we'll be through a support level on the weekly chart, so into a downtrend on the weekly chart. Aussie dollar, when you look at this on cash, that's actually we've broken through a support level here. On the futures market, it actually printed resistance, and we broke through it there. But for my mind, that was kind of falling through the ice, through parity, and we're kind of continuing down. Quite a lot of selling going on at the moment. I'm sure we'll get a bounce at some point, a little bit of a bounce, but for me, I think we're breaking into a downtrend here on these weekly charts. Pound, again, we've not come close to the resistance printing. We're heading back down to the support level here. So still a ways off in terms of support, but once we break through that, it'll be a downtrend. Euro, same thing. We hardly rallied much from that support level. We're back down at it, and we could easily kind of break through it next week. Japanese yen, well, we're well through it. Leading into the beginning of the year, this thing just broke through into downtrend. Potentially, we're going to put in a bullish divergence signal kind of soon, and that could mark a left shoulder from which we'll have a little bit of strength and a little bit of a rally. But then, this downtrend's not over until we see pullback to end of trend. So we've traveled so far, this time around. Let's see if that kind of prints and we get a left shoulder. So that dollar index coming through there, breaking those highs with a blue professional bar. Let's see if we get continuation of that. But my guess is we're actually breaking into an important up leg in dollar index. And then commitment of traders. I don't normally kind of talk about the commitment of traders all that much, but let me just roll through the charts because it shows what the professionals are doing. This is what I do. I calculate the net position by the commercials, the professionals, so you kind of net out the shorts from the longs. And what I do, I flip it upside down because it makes more sense to look at this, because when you flip it upside down, it kind of trends with the market. When the market's going up, this print is going up. When the market's going down, it's going down, and so on. Effectively, what's happening, this is net short. So when we're above the zero line, the professionals are net short. They're hedging. So what I want to show you as I roll through these charts is dollar index is going up. We're above the zero line on the commitment of this commitment of traders reading. So it's supporting a rally in the dollar index. British pound, we're negative, and the pound's kind of moving down. Euro, we're negative, supporting a downtrend in the euro. Japanese yen, look at this. We've been negative here and supporting, confirming this downtrend in the Japanese yen. And then if we look at Aussie dollar this week just went negative in terms of this reading, so it's supporting the downtrend in the Aussie dollar. Canadian dollar, we've been weak and negative here, so it's supporting. So you look at the commitment of traders, they're all kind of hedging these trending moves, and it's supporting what is going on. We're not getting kind of bullish divergence signals showing that this move is kind of reached its maximum and starting to lose its energy and turn around. We're not seeing that. It's just negative across all of those readings. And then just very lastly, because I'm talking about commitment of traders, so the money is flowing into US assets, it's flowing into equities, and we've had this incredibly strong rally in equities. And for me, as a kind of a natural bear, I find that difficult to stomach. But until I see the crash warning indicator on the commitment of traders, the weekly charts, we're not going to be maxed out. Yes, we've gone a little bit parabolic, over the last week. I'm sure we'll have a little bit of retracement and so on, but to be thinking about some kind of crash or whatever, it's just not going to happen until I see crash warning indicator. Now, the code that's on the site is just a handy little bit of code. It's not this code, the better code that I've kind of written for this. I've divided the crash warning indicator into corrections and crashes. Remember, corrections are usually 10% moves from highs. Crashes are usually 20% move from highs. And what this indicator does, looking at the commitment of traders, is looking for weakness in the commitment of traders, where we start playing around the zero level to start showing where that potential warning signal is. And over the last 3 or 4 years, the warning signals have been beauties. We had a warning signal moving to a correction, warning into a correction, and then a crash here, warning into a correction. Now, if you look at the commitment of traders readings that we've got on the SP, I use the SP because that's kind of long term. The E-mini won't help you. E-mini is all day trading stuff, so commitment of traders on the E-mini directionally doesn't help me. The SP is the big contract, is longer term, showing what the professionals are doing. And you can see all the readings here are all very highly positive at the moment. Until we start playing around the zeros, that's when the commitment of traders kind of crash warning signal kind of goes off. So until I start seeing that, I'm not going to be, got to get my head around thinking there's no kind of significant weakness happening. Little retracements and so on, yeah, sure, that's going to happen, but in terms of bigger downtrend moves, it's not going to happen until we see those kind of playing around the zero line. So big picture view, we've got this potentially breaking out into a big long-term strength in the dollar index, literally running for years, not just a question of days. So we're running for 2-3 type year kind of pattern. So and how that gets reflected at the moment is being reflected in strength in equities, and so that's what's kind of going on. The money is flowing out of Japan, it's flowing out of the Eurozone because it's capital flight. So that's what I'm looking at. I hope that's of interest to you. I might do another video this weekend just talking about the E-mini specifically and kind of the short-term chart. So hope your trading is going well.